Hi, this is Real Estate from an Attorney's Perspective. I'm Bill Mason, and today we're discussing adjustable rate mortgages, also known as an ARM mortgage. Okay, so an adjustable rate mortgage is a type of loan where the interest rate can change prior to the end of the loan term. This contrasts with a fixed rate mortgage where the interest rate remains the same for the duration of the loan. Okay, so adjustable rate mortgage that has an initial term, 1, 5, 7 years where it's fixed, then it changes. Fixed rate loan stays constant for the entire term, 15 or 30 years typically. Okay. An adjustable rate mortgage is a popular option among borrowers who anticipate either interest rates to decrease or they plan to refinance or sell their home before the initial rate period comes to an end. The initial rate period interest rate is typically lower than on a fixed rate loan, and the reason for that is the borrower is taking the risk on market conditions to get this a little bit lower rate, because don't forget, they have the risk at the end of the initial term that the rate could go up. All right, so that's the basic difference between the two and why somebody would take an adjustable rate loan. Okay, so the initial fixed rate period that you typically see for these adjustable rate loans are 1, 5, 7, or 10 years. Okay, once the period ends, the interest rate typically adjusts based on an index, like the prime rate, okay, plus a margin, which is a percentage that you agree with the lender. Okay, so these are the important things that you need to look at if you're considering an ARM loan. So the first thing you want to know is the frequency with which the interest rate can change at the end of the initial rate period. So it's common that once you get to that initial fixed rate period, that the rate will change every month or more likely every year. But it could be anything that's contractually agreed to with you and the lender. So then you want to know the formula for how they figure out the new rate. So the way that you would handle this is that you would find out what the index is, right? So the index is a benchmark interest rate that the lender uses to determine the new interest rate on the ARM. So popular indexes are the one-year treasury, the cost of funds, that type of thing. And then the other thing you need to know is the margin. And the margin is a fixed percentage that you agreed with the lender that will be added to the index. So if the index is 3% and the margin is 2%, the new interest rate will be 5%, okay? So that's basically the way that you would figure out the new interest rate on the loan, okay? And then you want to know what's the lifetime cap on the rate change. So in other words, there is typically a part of the loan documents that will have a mitigating factor in there for you where it says that the rate cannot go up more than a certain amount on each rate change, and it usually has a lifetime cap. Okay, so these can be a great alternative to somebody that doesn't plan on staying in a house for 30 years or 15 years, like they have a 5-year plan, and it's a great way to get a lower rate doing that, or they plan on refinancing, you know, maybe like in this situation we are now where the rates are very high and they're going to refinance hopefully when the rates come down. So they're really good options as long as you understand what you're getting. And it's the kind of thing that you need to really review with your loan officer, your realtor, and your attorney before you get into it to make sure you understand what you're getting. And this is the type of thing we deal with all the time at our firm. You deal with them, you see them a lot, very, very frequently on commercial loans. And you see them with pretty good frequency on residential loans as well. And if this is the kind of thing that you would be interested in discussing with us, we're available to consult. Please reach out to us. We'd love to hear from you. And additionally, if you could please like and share if you like the content. My name is Bill Mason from Mason & Mason. This is Real Estate from an Attorney's Perspective, and I appreciate your time.